Tech stocks taking a tumble this morning. Investors eyeing the Georgia election and the possibility of more tech regulation. Also, interest rates moving higher as the 10-year tops 1% for the first time in a year. Joining us right now to discuss this and so much more, investing in technology, where he sees opportunity, is co-founder of Palantir and, of course, founder and partner of 8VC. It's great to see Joe Lonsdale this morning. Joe, nice to see you. I want to get to some of your investments, including talking about what's happened to the Palantir stock, which has been on quite a run. Also, Wish, which I know is a big investment for you. But when you're just looking at some of the big tech stocks that seem to be moving lower this morning, what do you ascribe it to?
Well, this morning is probably tied to the election last night. People tend to like divided government a little better than when one side's in charge, especially when that side has a lot of people who are pretty unhappy with the tech world, I presume.
And are you convinced, though, that if it really is a Democratic blue wave, if you will, that there's going to be a significant regulation coming?
Well, it's clearly not a full blue wave, right? 50 votes with a tiebreak vote in the Senate and with a couple of moderate senators, one has to presume they can't do anything that's particularly crazy. But there's a populist movement on both the right and the left come after the big tech companies, and as well as to print a lot of money, and as well as to I think the vision right now in our country for the future is there's an optimistic side of it and there's a cynical side of it, and the market kind of sums up bottom up these two different visions. And I think what we've made the story in the last 6 months is that people have realized there's an optimistic side of what's going to happen in the next 10 years, and there's a possibility of a roaring 20s, but there's going to be in the meantime some regulation.
And which version of it do you see? Is it going to be the roaring 20s? And how are you setting yourself up in terms of making investments, therefore?
Well, the big question at the end of the day in markets and innovation is really total factor productivity. It's how much productivity or growth are we going to have over the next 10 or 20 years? And that kind of filters into everything else. And it's been very interesting the last 20 years. You've seen productivity growth has been really slow. A lot of us think that's because the consumer tech stocks, that's not really captured. Entertainment, better content, that doesn't really get captured in productivity. The big waves in tech right now, they're not consumer. They're the renaissance in biology, which of course we're seeing with the vaccine. There's new types of logistics, healthcare, stuff going on with finance and energy. There's all this cool stuff happening. We're starting to see now even in infrastructure with things like the Boring Company. So these are all advances that do get captured in productivity. And it's very clear as a lot of this is working, as we see our society shifting in these areas, that you can't have higher productivity growth. So if we don't break the markets, I'm very optimistic we're going to get some really great returns in the next 10 years.
A lot of the tech stocks in the public markets have obviously done quite well. Let's show you Palantir, which, as you know so very well as a co-founder, has been on a remarkable ride since it's joined the public markets. Is this, when you look at the valuation of a Palantir, or by the way, when you look even the valuation of some of the big FANG stocks today, do you say the next 12 months higher, lower? Do you feel like there's a frenzy here or not?
Andrew, I'll be honest, everything I do is over a 3 to 5 year period. If I could tell you what's going to happen over 12 months, I'd probably be a lot richer. But the thing the market seems to realize about Palantir is that it does have some of the very best technologists in the world. The big trend that's happening with that company, by the way, right now in the last even several months, is rather than only selling these full, really big solutions to come in and replace everything for a CIO, they're actually being able to break up their technology and sell it as enterprise software. So you have some of the very best information infrastructure in the world. And you have big companies for the first time buying pieces of Palantir as enterprise technology for a lot of money. That's a really bullish sign.
Okay, so I won't ask you about 12 months, but how about 3 to 5 years out for Wish? That stock has actually had a bit of a more challenging ride since it's gone public.
I'm extremely bullish on Wish over that time period. Wish was never really very well understood by venture capitalists who turned it down at the beginning. There's now 100 million people using it to buy goods. The big question in these areas of technology is how are you doing something that's newly possible that was not possible before? And Wish figured out like the very best possible way of doing mobile commerce. They're the third biggest general e-commerce company with the third most consumers in the U.S. using it. And there's just all sorts of cool things that they're doing. I think people don't understand the mom and pop strategy. They're actually empowering tens of thousands of mom and pops for their logistics network. It's going to turn to hundreds of thousands. And so that's a unique network. It'll be a bigger footprint than Walmart in terms of square foot, people picking things up. They're clearly much better data team than everybody else. There's just all sorts of moats in that business and how they deal with the merchants all around the world. So yeah, I think the market does not understand the Wish platform at all. And that's one of the things that's most mispriced in my view.
Shepard Smith here. Thanks for watching CNBC on YouTube.